Good morning, everyone. This hearing is now called to order. For decades, the auto industry was a symbol of American innovation. But in the past few years, a combination of poor management, costly obligations, and dwindling profits has taken its toll. The resulting declines have done more than weaken the big three. They have crippled the small business community. As the automakers fight to stay afloat, countless entrepreneurs have been caught in their wake. All across the country, small suppliers are struggling. They are fighting to survive in an uncertain industry and are suffering more than their corporate counterparts. This is a serious concern. These businesses not only employ millions of workers, but sustain the very industry we are trying to save. At the end of the day, strengthening and supporting small firms will be critical. Failure to do so will shrink the supplier base further, dealing a lethal blow to businesses like GM and Chrysler. In today's hearing, we will discuss the current state of the auto industry and examine the impact of its decline on small businesses. Like most corporate giants, the automakers rely on entrepreneurs. The industry is sustained by a multi-tiered nationwide network of parts providers. These businesses produce everything from carburetors to tire rubber, and the vast majority of them are small ventures. But don't let their size deceive you. They account for literally millions of jobs. Parts suppliers alone employ 3.2 million workers. But as the big three continue to slide, an alarming number of small firms are following suit. In fact, experts predict half of the nation's auto suppliers will be shut down by 2012. Many have closed their doors already. The impact of these bankruptcies is not isolated. When a small supplier goes under, it sparks a ripple effect, one that resonates throughout the entire economy. On the most basic level, we are talking about large-scale job losses. Already, thousands of workers in related industry have been laid off. If this trend continues, thousands more may lose their jobs. In the last few months, steps have been taken to shore up the big automakers. But despite these actions, little has been done to help small suppliers. If anything, efforts thus far have failed small businesses. That is a big mistake. Cutting entrepreneurs out of the process means more setbacks down the road, especially considering the end goal of these measures, job retention. Ultimately, we're trying to save jobs and stabilize our economy, not prop up an industry that has failed to keep pace with the times. Small suppliers are the businesses actively looking to adapt. It only makes sense to give them the tools to do so. One of the greatest lessons of the financial crisis is that stability comes from the bottom up, not the top down. The automakers are no exception. It is critical that any restructuring accounts for small suppliers. Proposals to aid second-tier manufacturers, for example, will go a long way. But regardless of how the auto overhaul takes place, one thing is certain: it needs to be deep enough and comprehensive enough to reach small businesses. After all, that is the industry's foundation. That's where the jobs are, and that is our best bet for stabilizing and rebuilding. I would like to thank all of today's witnesses in advance of your testimony, and I'm glad that they were able to take time off from their job and their businesses to be here, and look forward to hearing from you. So with that, I will now like to yield to the ranking member, Mr. Graves, for his opening statement.
Thank you, Madam Chair, and thank you for conducting this hearing today on the role suppliers play in the auto industry and how the current economic conditions are obviously impacting them. I also want to thank all of our witnesses for being here today. I know you've come from all over the country, and I appreciate you taking the time, as the chairwoman pointed out, to come and be with us today. Nothing illustrates our the state of our economy better than the state of the domestic auto industry. And it seems that every day there are new media reports highlighting job losses, production cuts, bankruptcy filings, and plant closures, but a significant part of the story is being underreported. Suppliers play an equally important role in the economy, and it is important that their concerns are not overshadowed by the big three. According to data from the Center of Automotive Research, suppliers contribute over $388 billion to the U.S. economy and are responsible for over 3.29 million direct and indirect jobs. These two figures stress the impact of the industry to the U.S. economy. It is important that we understand the significance of these numbers. Congress must do everything it can to create a favorable business environment for these folks to be successful. Auto suppliers are located throughout our country and include businesses of all kinds, from fabric makers and chip makers to die casters and surface finishers. They all have a vital role to play in the manufacturing of an automobile. When the economy struggles, the auto industry is affected, and its suppliers feel the ripple effect. It's imperative that as Congress considers proposals such as climate change and card check, we do not impose new burdens on the already struggling economy. I also believe that as we engage China on issues such as currency manipulation and piracy, we must do whatever is necessary to level the playing field. As Congress begins to debate health care reform, we must identify a way to increase accessibility while increasing affordability without imposing some excessive mandates. Lastly, we must keep a watchful eye on our tax policy and not increase taxes on the people that we're asking to lift us out of this recession. Again, Madam Chair, thank you for holding this hearing today. I look forward to hearing from our witnesses and look forward to hearing about how vital our nation's suppliers are to the auto industry.
Thank you. And now I welcome Mr. Carl Reed, our first witness. He's the president and CEO of Abbott Work Holding Products in Manhattan, Kansas. Abbott Work Holding Products manufactures chalk jaws, tooling columns, and various work holding fixtures. Mr. Reed is testifying on behalf of the Association for Manufacturing Technology, which represents American providers of manufacturing machinery and equipment. Welcome.
Thank you, Madam Chairman. Committee members, thank you for this opportunity to address you. I must say that Mr. Moore and I have had an association before when I was on the Manufacturing Technology Board, and he has been a strong advocate of small business and manufacturing. Even though he's not in my representation area in Kansas, I would vote for him if I was able to do that. Your opening statement.
That took 1 minute of your
Okay.
statement, by the way.
Maybe it's worth it in today's market. The opening statement from both you, Madam Chair, Mr. Graves, is pretty much what we have identified very nicely in our document, which I'd like to submit for the record.
Without objection.
And basically, and these gentlemen, I'm sure, will amplify those same type of observations. So it might be helpful for the committee members to understand, maybe on a more personal basis, on the tier system we talked about. We obviously know the money is not funneled down to where it needs to go. In my particular case, I have two small businesses. One is in Kansas and one is in Arizona. And one is a foundry, so I'm really on the bottom of the food chain. So I actually sit the raw material and I make the tooling that goes into the machine tool company that some of these gentlemen have. They manufacture the product and it goes on the line. So you're really talking about 5 or 6 different levels that need to be helped. And at this point, no help has gone anywhere down, as you folks are well aware. It also should be pointed out, which I'm sure you're aware of, that we are not just associated with the auto industry, although that's a primary contact for all of our businesses. We are deliberately working on other industries because you can't afford to have everything in one area. So if the auto industry, a major player goes down there, it's going to affect aerospace, it's going to affect automotive, it's going to affect industrial, ag, anything, medical. So we have to be concerned that what we're doing in the areas of activity and help, hopefully, that we will get will allow the manufacturing sector, especially the small business, which you're probably aware employs about 80% of the jobs in the country are small business folks. So we make sure that whatever we do can go all the way through the manufacturing sector. And also, if we don't do something for too long, that American tradition of innovation and originality and entrepreneurship is going to be either bankrupt or going to be forced to go other places to manufacture those products, which of course we don't want to do. And being a former Navy captain pilot, I don't want the military aspect to go aside because we have to be able to provide products in a time of war or urgency. So with that, let me maybe make a few suggestions that I might, in my business, and I think some of the others would tend to agree that might be helpful that we would do. First and more, the SBA program that exists. In the past, that's been used for primarily seed money to get new ideas, get going, so forth. A suggestion that I might make, if we could come up with a plan where SBA could function as a local bank would be, which is now very limited to us, give us some low-interest loans, make it a 15-year amortization, 5-year balloon, something like that, where it would give us an opportunity to get operation and working capital, not seed money. We need operation, working capital to stay in business. So that'd be one suggestion. Most of us employ, because we want to, we handle health insurance for all of our own folks. In my case, I'm going to be spending $250,000 this year on health insurance alone. If you would, just to give an idea, my average employee at small business, say he's $15 an hour rate, so if you fully burden that, you're looking at $4,000 a month. Divide that into $250,000, I can keep 8 more people employed off the unemployment working if I had some relief for my health insurance costs. Another suggestion might be a very simple way is let's eliminate or at least defer FICA charge for a while. That immediately puts 15.6% back in the employer's pocket right away to keep, and you don't have to go through the Washington bureaucracy and the politics, and we officially have that right away. The last thing I think I'd like to suggest is if we can get some straight infusion of cash from stimulus, great, but I don't know how that's going to happen. But these other three, I think, are reasonably approaches. And I must say, before I run out of time here, the $250,000 number that's floating about the tax increase that Congress is considering, I want you to be aware that most small business, if you end up fortunate enough to make $250,000, that goes back into business to buy machinery and tooling and paying for health care. We don't buy corporate jets. We don't buy Ferraris to be driving down the street. So I would caution you about any kind of a tax increase whatsoever. Thank you so much for that opportunity.
Your time is up, not because you were talking about taxes. But it's, our next witness is Mr. Wes Smith. Mr. Smith is the president of E&E Manufacturing Company in Plymouth, Michigan, a company whose products are found on millions of American-made vehicles. Mr. Smith is testifying on behalf of Motor and Equipment Manufacturers Association. Since 1904, MEMA has exclusively represented and served manufacturers of motor vehicles components. Welcome, sir.
Thank you very much. And again, my name is Wes Smith, and I am the president and owner of E&E Manufacturing Company. And I appreciate the opportunity to discuss the challenges we small suppliers in the motor vehicle industry face. My company, E&E Manufacturing, is one of these small suppliers. We're located in Plymouth, Michigan, and Athens, Tennessee. We began our business over 45 years ago. It has since grown its footprint from a small 5,000 square foot shop to almost a 500,000 square foot world-class service supplier of highly engineered stamped metal solutions, and we are proud to have several patents under our belt. We were the first metal stamping company also in the nation to be awarded the Michigan Voluntary Protection Program Star Award from OSHA for our outstanding safety program, and are determined to continue to provide safe and meaningful employment to our over 200 employees. And again, this is actually a national program under OSHA, and we were the first metal stamper to receive that, and we're very proud of that. We're also currently on track to reach our $50 million in sales this year. This projection, however, is only 50%, which we had previously forecasted for our 2009 budget. That the economic climate is a difficult one is no news to anyone. Despite the significant challenges facing the motor vehicle supplier industry, very little assistance has been focused on small suppliers. And we urge the committee to work with others to craft specific policies to address the needs of these suppliers. The auto industry is one of the most, in its supply base, is one of the most intricate industrial complexes. On one side is the vehicle manufacturers, a dozen or so major original equipment manufacturers, OEMs, that dominate world production, have sales measuring in the tens to hundreds of billions of dollars. And on the other side is a dozen or so major material suppliers, the steel, aluminum, and plastic providers that too have sales measured in the tens of billions of dollars. Caught in between are the over 3,000 suppliers that produce the 10,000 parts that make up every passenger car and truck. All of these parts of the supply chain are interdependent. Just as an example, 51% of GM suppliers are also in Ford Motor supply base. In revenue dollars, this interdependency is even more dramatic. 90% of the dollar amount that GM spends is with suppliers who also supply Ford. Because of drastically reduced volumes and non-functional capital market, this interdependent structure is in crisis. Financial assistance to suppliers has not provided small manufacturers with the capital and resources to survive. And let me give you 3 examples. Firstly, the U.S. Treasury program was designed to provide protection against bankruptcy risk of General Motors and Chrysler. The program targeted only direct, larger first-tier suppliers of GM and Chrysler. As such, smaller suppliers facing financial distress are completely dependent on their first-tier customers to provide financial assistance through the supply chain. Secondly, Section 136 of the Energy Interdependence and Security Act of 2007 authorized grants and direct loans to eligible applicants for projects to re-equip, expand, and establish manufacturing facilities. The grant program had originally set aside money for small suppliers, but in the end, the grant program has not been funded. Since the issuance of the rule last fall, the DOE has received over 100 loan applications. MEMA understands that a majority of the applications were component manufacturers, but is highly unlikely that the smaller applicants will ever be able to qualify for these loans. Thirdly, the SBA programs have been the foundation of small supplier support for decades. However, the SBA loan programs are limited to only $2 million. Since suppliers are expected to fund a great deal of research and development in large OEM projects, the loan amounts have limited their usefulness and our participation. Although small manufacturers should be able to turn to the SBA loan program, the current system is simply not designed to meet the needs of manufacturers with substantial raw material research and development costs and working capital needs. Perhaps these unintended consequences, unintended or not, these consequences are significantly detrimental to my company's ability to protect and grow meaningful manufacturing jobs in Plymouth, Michigan, and Athens, Tennessee. I myself have traveled to D.C. a number of times and have met with over 100 members of Congress, officials at the White House, as well as the Departments of Commerce, Treasury, and the USTR, to speak about manufacturing issues. In order for change to take place, everyone must join in this fight. We are pleased to work with the committee members on an initiative laid out in my written statement, and I would like to thank you for your time and efforts to making the millions of American manufacturing voices heard. Our only hope is that this message is heard and understood and acted upon before it's too late. Thank you.
Thank you, Mr. Smith. Our next witness is Mr. Ron Overton. He's the Vice President and General Manager of Overton Industries International in Mooresville, Indiana. Overton has specialized in carbide tooling for over 40 years. Mr. Overton is testifying on behalf of the National Tooling and Machining Association that represents the precision custom manufacturing industry. He's also testifying on behalf of the Precision Metal Forming Association, which represents the $91 billion metal forming industry of North America. Welcome, sir.
Thank you. Madam Chair, Ranking Member Graves, members of the committee, thank you for the opportunity to testify today. My name is Ron Overton, President of Overton Industries, based in Mooresville, Indiana. In addition to my role overseeing day-to-day operations of our tool and die manufacturing business, I also serve as the current chairman of the National Tooling Machining Association, the NTMA, which is partnered with the Precision Metal Forming Association, PMA, in Washington to speak with one voice on behalf of small middle market manufacturers, including thousands of North American automotive suppliers. My father founded Overton & Sons Tool and Die in 1968, and it remains a family-owned company located in a quiet community in central Indiana. Today we have 84 employees, down considerably from years past. 65% of our business is manufacturing tooling, plastic injection molds, and other products for exhaust systems, shocks and struts, and interior body panels supplied to the automotive industry. While we do not ship directly to original equipment automotive manufacturers, we primarily serve the General Motors, Chrysler, and Ford supply chains. These are the worst times I've seen in my 30 years in this industry. Some experts believe that possibly 30% of these small companies will not exist 1 year from now, unless the U.S. government takes additional steps to support not only the automotive manufacturers and large Tier 1 companies, but also downstream suppliers. The greatest risk to companies like ours is if a large Tier 1 shuts its doors. At this time, Overton Industries has several $1 million in outstanding receivables from jobs for GM and Chrysler through Tier 1 companies. Members of the NTMA report that payments from Tier 1 suppliers can now take over 180 days, despite a recent survey that shows GM is paying their Tier 1 companies on average within 58 days and Chrysler within 55 days for the tooling work businesses like ours provide. Our overseas competitors receive progress payments and have received at least 90% of their payments before the product leaves their shores for the U.S. How can small middle market companies like ours continue manufacturing in America under the current terms? The government established the Automotive Supplier Support Program and assumed the support of Tier 1 companies would trickle down to downstream suppliers. The government should help open the faucet because the only thing trickling down right now are pink slips. The moment a lender or receivables insurance broker sees we are involved in the automotive industry, they immediately move us to a high-risk category, will not extend credit, or they will transfer us to a third-party lender. They do not believe we are bankable due to our auto industry work. Some brokers are only insuring 10% of an accounts receivable of some open Tier 1 invoices, whereas in the past they would typically insure 70 to 80%. A sample of automotive suppliers indicates that only 29% of downstream suppliers surveyed have access to credit based on receivables from Chrysler-related business, while 37% of suppliers at GM have access to credit based on their receivables. A government guarantee of the receivables and allowing safe passage of tooling payments through Tier 1s to these downstream suppliers will allow access to credit. Even under the Small Business Administration's 7A loan program, lenders do not believe companies with Tier 1 automotive supplier and manufacturer receivables are bankable, meaning we're too high of a risk for creditors. In addition, the 7A program requires all holders of 20% or more of a small business to personally secure the loans, something very few of us are willing to do in the current environment. Without access to credit and without leverage to secure payments, small family-owned companies like ours are bearing the brunt of the automotive industry's problems. I believe the federal government can extend relief to our companies by ensuring or guaranteeing receivables of businesses supplying a vehicle manufacturer which receives taxpayer funds. For example, a tooling company like ours would register their purchase order with the government and either guarantee or insure or reinsure payment under certain terms. The government, as in the case under current U.S. and Canadian programs, could charge downstream suppliers a 1 or 2% fee depending on the service provided. The federal government would make money, and Tier 2 and 3 suppliers could continue operations with the confidence that we will receive timely payment. This would also provide a significant comfort level to our creditors. The government should provide a safe passage mechanism of our receivables through a Tier 1 in the event of bankruptcy or disruption in the supply chain. The federal government has much more leverage and resources to collect on outstanding invoices than a company with 84 employees in quiet central Indiana. I cannot stress enough, this is not just an automotive industry problem. It impacts all Americans in all communities, especially small businesses. Thank you for the opportunity to testify today.
Thank you, Mr. Overton. And the chair recognizes Ranking Member Mr. Graves for the purpose of introducing the next two witnesses.
Thank you, Madam Chair. Madam Chair, our next witness is Mr. Jim Jones. He's the Vice President at Dixie Industrial Finishing Company and comes to us from Tucker, Georgia. And he's testifying on behalf of the National Association of Surface Finishers. And I believe you got 100 employees in your company, and kind of the perfect example of what we're trying to find out today as far as a company goes and how you're affected. Thanks for being here.
Thank you, Madam Chair.
Microphone, please.
Thank you, Madam Chair, Ranking Member Graves, committee members. It's a great pleasure to be here and an honor to be here to participate in this hearing. For almost 50 years, Dixie Industrial Finishing has supplied surface finishing of services for a range of industries that provide jobs and quality of life for Americans as well as products for consumers worldwide. My company and nearly 2,000 operations like it are critical links in the automotive and other major manufacturing supply chains. Over 80% of U.S. surface finishing job shops employ fewer than 75 people, and the majority of the industry has less than $10 million in annual sales. Yes, at one time we did have 100. The first of the year we had 84. Now we're down to 54. Like other key industries, surface finishing plays a significant value-added role in auto parts and component supply chain. We use electrochemical technology to apply metal and other coatings onto literally thousands of different types of automotive parts. Our processes make the auto components that we finish look better, work better, and last longer. An estimated 20% of parts on automobiles require electroplating of metals or related coatings. Functional coatings give parts friction reduction, wear resistance, corrosion protection, conductivity, or other characteristics. Certain coatings are so critical that for a car, and for that matter, a jet or a spacecraft, can't work without them. In fact, one finishing company located in the Madam Chair's district provides surface finishing services for some of the most sophisticated components and equipment used by NASA and the Department of Defense. By volume, we estimate the automotive products account for nearly 50% of the total number of parts we service. The contribution of surface finishing to the broader manufacturing value chain has been estimated by some to approach $100 billion. The value added from the metal plating or related coatings is often higher than the value of the parts themselves. The impact of the U.S. automotive crisis and its ripple effect through the supplier base has been extremely painful for the finishing industry. Those shops that service automotive directly or through Tier 1 or Tier 2 suppliers are currently facing the worst downturn we have seen in our lifetimes. As manufacturers, our economic livelihood depends on the health of our automotive and industrial customers. It comes down to basic economics. When our customers suffer, we suffer, and the steady jobs and benefits we provide for over 100,000 American workers in the finishing industry are disappearing at an alarming rate. It's estimated that the finishing industry has shed approximately 30,000 jobs nationwide just in recent months. Automotive is not the sole driver, but a significant factor. Dixie Industrial Finishing Company serves a relatively diverse customer base. Our current revenues are just under 20% automotive. Our sales have dropped from $8.5 million annually last year to a projected $5 million for 2009. As I said before, we reduced our workforce by 35%. But many job shops in the auto supply chain have seen sales decline by as much as 70%. These are typically well-managed, quality-driven, and customer-focused companies. Yet they face a near or certain disaster that has absolutely nothing to do with their ability to drive a successful business. They've responded to massive production slowdowns by their large automotive customers by cutting shifts, scaling back work weeks. Some have slashed every cost they can actually manage and are holding on until the crisis is over. Others have filed for bankruptcy. In the meantime, Chrysler's restructuring plans and GM's pending plant slowdowns create major uncertainties for the finishing industry of the future. There are several immediate challenges faced by small auto suppliers that need to be addressed. First, banks are not lending money. Very few, if any, small finishing job shops are able to get financing. We have not seen our job shops successfully using the SBA 7A guaranteed loan program for automotive-related programs. The program relies primarily on commercial lenders which aren't financing projects for automobile-related projects or for manufacturing. Even with SBA guaranteeing, I was told yesterday by one CEO in the industry that he asked for an SBA loan program at a major bank. The bank said it was not lending to anyone whose exposure is greater than 25%, even with the SBA guaranteeing 90% of the loan and zero fees. Other federal assistance in the form of loan guarantees or aid has not been accessible to job shops. The program out of the Treasury that guarantees or insures receivables for suppliers of GM and Chrysler limits aid direct to suppliers of GM and Chrysler. Some of my colleagues in Detroit were enthusiastic when we first heard about the Energy Department's problems. Associations outside counsel reviewed the eligibility criteria that will have hurdles to participate. We're not aware of any company in the finishing industry that is participating in the program. We've outlined a few recommendations in our written testimony that respond to the increasingly higher operating costs of the finishing industry, tax incentives for all manufacturers to invest in energy efficiency and environmental control, the problems that we face on the manufacturing front are repeated price concession demands from OEMs to the auto supply chain, the high structural costs of doing business in the U.S., offshoring to Asia and other low-cost countries, and unfair trade practices and currency manipulation by some of our trading partners. The global economy has changed. The supplier base of the automotive industry and U.S. manufacturing. To illustrate this point, my company has been forced to replace 100% of its sales dollars in the last 10 years. This means that no matter how excellent our quality and service are, no matter how lean we've become through automation and continuous improvements, no matter how competitive we price, our industrial customers and opportunities continue to disappear. In light of our challenges, we would recommend to the committee our broader agenda for helping finishers and other small manufacturers invest, innovate, and help create jobs for American workers. I've included this material in my written statement. I'm sorry for running over. In the South, we talk a little bit slower, but thank you for the opportunity.
I let you go because I didn't notice it.
Thank you, Madam Chair. Our next witness is Chris Norch. He's the president of Overton Industries in Denison, Texas, and he's testifying on behalf of the American Foundry Society, and appreciate you coming today. Thank you.
Good morning, Chairwoman Velasquez, Ranking Member Graves, and members of the committee. Thank you for providing me the opportunity to comment on the vital role of the metal casting industry plays as a supplier to the domestic auto industry and how the downturn in the auto industry is having a devastating impact on many of our member companies. As president of Overton Industries, my metal casting facility is comprised of 125 employees specializing in the production of aluminum castings for the automotive, defense, aerospace, and commercial sectors. I'm here representing the American Foundry Society, or AFS, where I serve on its national board of directors and also as a regional vice president. The AFS is a major trade and technical association for the North American metal casting industry. It is comprised of more than 8,500 members representing more than 3,000 metal casting firms, their suppliers, and their customers in every state in the country. The majority of our members are small family-owned businesses with an average workforce of 100 people or less operating in small towns and cities across the country. The metal casting industry is a critical supplier to the automotive industry and auto supply chain in general. It provides at least 100 castings in every lightweight vehicle produced in the United States, which equates to more than 600 pounds of cast metal per vehicle. In fact, automobiles and other transportation equipment utilize 31% of all castings produced in the U.S., including engine blocks, crankszafts, brake drums, and transmission housings, to name just a few. The recent decision by Chrysler to file bankruptcy and shut down its plants during bankruptcy could not have come at a worse time for our parts suppliers whose revenues have already fallen sharply. Our auto suppliers are already trying to figure out how to survive the other recent surprise news that GM would shut many of its plants for most of this coming summer. These shutdowns could and will be disastrous to many metal casters because they're already operating on paper-thin profit margins because of previous production cuts and the strong-arm pricing tactics from the Detroit Three. Some of our small suppliers will have to liquidate because they don't have the resources to reorganize in Chapter 11 bankruptcy. Over the past 6 months, 15 metal casters alone have been forced to close their doors and will close shortly, from Navistar's Indianapolis Casting Foundry, employing more than 700 workers, to 25 workers at the Elmira Pattern and Foundry in New York. Other facilities closing are located across the country, from Monroe City, Missouri, to Warrenton, Georgia, to Van Nuys, California. In recent months, we've seen a surge of foundry layoffs directly related to the downturn in the auto sector in hundreds of communities. Grady Foundries, a Milwaukee-based company operating 8 foundries, has struggled with the severe downturn in the economy. It has had to lay off hundreds of workers at its Minnesota, Wisconsin, and Michigan plants. A factory manager at its St. Cloud, Minnesota foundry recently reported that orders are down from the auto sector 65% compared with a year ago. At the end of April, they have announced they'll be closing their Greenwood, South Carolina automotive foundry in an area that is already hit with 14% unemployment. AFS estimates that we could lose another 30 foundries in the next 6 to 9 months if we do not see a rebound in the automotive sector and the economy in general. With little attention being focused on the lower-tier suppliers, we need Congress and the Obama administration's support to help ensure the survival of Tier 2 and Tier 3 metal casting suppliers. A recovery plan for GM and Chrysler is simply not viable unless it takes into account the entire automotive supply chain, including the metal casting suppliers of small and medium-sized businesses who supply Tier 1 companies. In addition to the downturn in the auto sector, the metal casting industry must overcome a multitude of domestic and international challenges. We are concerned with pending climate change legislation that could increase our energy costs significantly. We will not be able to compete against foreign manufacturers who already have huge labor, regulatory, and subsidy cost advantages. We are concerned that our government's current trade policies that have dramatically affected the viability of our industry, the future of U.S. domestic metal casting industry, and its jobs are severely threatened by the increase of imported castings, as offshore facilities have grown to meet more than 23% of the demand in the U.S. A number of our U.S. trading partners, and most prominently China, have actively pursued policies that undervalue their currencies and subsidize the manufacturing sectors. Because of these lower costs, our association members continue to see their customers move offshore, and we urge you to support the proposed bipartisan currency manipulation bill, the Currency Reform for Fair Trade Act, which will be introduced today. We all have a stake in the strong automotive domestic industry. As Congress and the administration invest billions of dollars into Chrysler and GM, it's vital that we help ensure the survival of Tier 2 and 3 companies in the supply chain. A recovery plan for Chrysler and GM is simply not viable unless it takes into account the entire chain, including metal casting suppliers. Any restructuring plan must preserve jobs in the U.S. and not shift more of GM and Chrysler's manufacturing footprint from the U.S. to Korea, India, and China. The future of our company is intertwined with the success of our manufacturing base. Our country is dependent on a strong economy, and we cannot have such without a strong manufacturing presence. Thank you very much for your time.
Thank you, Mr. Norge. The question I'm going to ask is a very important question for the record. So I would like for each of the witnesses to answer it. And I know that each of you represent a small business, but you're representing also 5 different associations. And I would like to ask you the following. To date, the administration has allocated nearly $38 billion to the domestic auto industry. How much of these resources, if any, are going to the small firms that supply the big manufacturers? Mr. Reed.
I'd have to check for sure, but my opinion is in our area of machine tool manufacturing, I don't believe any dollars have gone in to our.
Thank you. Mr. Smith.
Although I do believe that in General Motors' case that there are small suppliers that are signed up for the either the early pay or the receivable protection program, although it be somewhat few. The reality is that most of those have not been, the funding has not flowed really on any of that. And of the $38 billion, most of that went directly to the original equipment manufacturers. And the set aside for the, which was the $5 billion for the tier ones and in particular the direct suppliers, that hasn't really been effective at this point.
Thank you. Mr. Overton.
I'm not aware of, we represent primarily Tier 2s and Tier 3 suppliers, so I'm not aware of any of that $38 billion money that has trickled down to any of our members in either association, the National Tooling Machining Association or the Precision Metal Forming Association.
Mr. Jones?
The surface finishing side, I only know of one surface finisher that does direct work with one of the big 3, and he would be able to participate. All other surface finishers are in the Tier 3, Tier 4 level.
Mr. Norge.
Thank you. As far as the record to date from American Foundry Society, we've seen no money trickle down, and on the contrary, receivables are still being pushed out anywhere from over 60 to as many as 120 days. So the effect is devastating right now.
Thank you. To all of the witnesses, with the extended shutdown at GM this summer and the lingering potential for another bankruptcy filing, clearly businesses like the one that you represent will be bracing for more difficult conditions. Could bridge financing programs or other types of short-term federal assistance help your members weather this storm? Mr. Reed.
Yes, I would think that's an episode that we have to pursue. And I must caution that most small business people don't necessarily want more regulation and the government involved, but we're in a situation we don't have a choice.
Okay, let me ask you this other question. What size of loan will be necessary to support businesses like yours through the downturn? What will be the average size?
Tough question, because we represent, there are some folks that I know are 17, 18, $20 million in the hole. If you get down to the tier 4 or 5s, $500,000 would get someone through the next 6 months, which I think is that's the thing I think we should think about, getting everybody through for the next 6 months.
Okay. Mr. Smith?
From our excuse me, from our standpoint, the issue is that most loans are based on receivables. There, quite frankly, aren't any receivables out there, and that's the issue. And the issue with the crisis in the auto industry isn't as much as will my pre-petition bankruptcy amount get paid. It's what are we going to sell afterwards. And so I would like to see a program that's really going to help us not on the downturn, but on the hopefully the upturn. So when things turn around, you're going to do that from a base of no receivables. So you actually have no cash to go ahead and, to buy new raw materials, to fund, your inventory buildup, and to start supplying. That's going to be the crisis for us.
Mr. Overton?
If the GM bank or possibility of bankruptcy or shutdown is going to be devastating to our Tier 2 and Tier 3 members. We're already feeling it with Chrysler, but GM will be considerably worse than what the Chrysler effect's going to have. Our issue as far as loans, we're looking more to be paid for the receivables we have out there right now. We've got receivables typically with the payment practices of GM, Ford, and Chrysler with the part approval process. We have receivables out there for 6 months to 2 years that are still several $1 million. If GM declares bankruptcy and being unsecured creditors and all that money's lost, the effect on our Tier 2 and Tier 3 members would be devastating.
Okay, let me ask you, if you knew, would your business be willing to pay a nominal premium for credit insurance, or perhaps its receivables, if you knew you would be paid in a timely manner and through a federal program or financing facility?
Absolutely. I think that's the answer. I think that's the cleanest, quickest answer. If it's comparable to what the Canadian government does with their EDC program, the Export Division of Canada, they charge a 1 or 2 or 3% fee to insure those receivables. I think that's the cleanest, quickest. And if we need that to desperately happen before GM files bankruptcy to guarantee those outstanding receivables.
Mr. Jones.
Thank you. As we all know, that cash flow is the life's blood of any small business. And as manufacturing opportunities are disappearing, then consequently that certainly affects the cash flow, whether it be with manufacturing through the big three or whether it be through other support industries for the automotive. But certainly any infusion of cash into the small businesses would certainly help them.
What will be the average size of a loan if you take that route?
It's difficult for me to say the financial structure of all of the industries. And ours, when we're looking at about less than 20% exposure on the automotive side, however, we are seeing opportunities that are disappearing and going out of the country in other sectors. Then hopefully we can start looking at some of the unfair trade practices and other issues that are affecting manufacturing to try to bring some manufacturing back into the country. Then somewhere in the neighborhood of probably $1 million would.
But would you agree with Mr. Overton's assessment that paying a minimal premium for credit insurance or perhaps discount its receivable if you knew that you will be paid in a timely manner, that you will support that? Mr. Norge.
Thank you. I agree with the comments made by Mr. Overton, and I would like to add that it is difficult to assess the amount per each individual business based on what their leverage or exposure is with the auto markets. In conjunction with what Mr. Jones stated, we do need to, as we're looking at propping up these Tier 2, 3, and 4 businesses, we also need to look at really drastically reviewing those trade policies, bringing manufacturing back. But we also have other issues where we could create work for the industries that we're all here representing in the form of technological advances and all of our services providing work for renewable energy sources, alternative energy sources, and all kinds of things that we can make in this country. That's what built this country, making, manufacturing things. And we have other avenues where we should be putting some time and effort into as well. And I think that will help prop up the hit that a lot of these businesses are taking. We would have to diversify and maybe be a little creative. But again, that's what the ingenuity and industrial sector is what built this country to begin with. And I think collectively we can work together to pull out of a lot of these sectors.
Thank you, Mr. Norge. And now I recognize the ranking member, Mr. Graves.
Thank you, Madam Chair. We had a hearing, I don't know, 3 or 4 years ago in a subcommittee that I chaired dealing with piracy, and I know this is a little bit of a side issue, but we kind of brought up losing some of this, or some of you losing your business possibly to China. And does it concern, the question's for all of you, does it concern you about, when you've got manufacturers trying to control costs, maybe going or looking for something like that? And when we had that hearing on piracy, I mean, the products were absolutely identical. The quality was horrible in most cases, but they were absolutely identical, even down to the packaging in many cases. Do you all worry about that? Is it a concern? Is it a growing concern? Shifting more towards those sub-quality products for a much cheaper price sort of thing, and particularly, with our piracy issues that are coming out of China right now. Mr. Reed?
Yes, I would concur totally with that. And on two sides of my personal business, on the foundry side, as anyone knows, and the gentleman with the Foundry Association you cannot compete with the Chinese market in that place. They will copy you. They'll send stuff in the United States. I actually had an operation in China, which I've since canceled because of that situation. They were basically just pirating the activity. I think the problem that we're facing is we don't play on level deck in America. I think the number that we come up with, we're already starting like 25% behind the curve when we go compete against anybody else in the world because of our tax codes, because of OSHA, because of everything else. And we've been able to be successful over the years because of the innovativeness and productivity of the American worker. And that's what's so critical to me right now is that I see, and all of us are saying the same thing. Basically, we have to do something to keep the small businesses going with the technology and innovation that we've had for so many years. I think we have a lot of other issues than piracy that concern. Obviously, we got a problem internally right now. If we can get that solved, yes, sir, Mr. Graves, I think we need to pursue that in some more fashion to, nobody wants the protectionist system per se. We want to be able to do what we think we can do better than anybody else. That's what's made us doing these things. But in the same token, you would like to have some support from the government as well as the international community to make sure that we're playing to the same rules.
On behalf of MEMA, we have a large number of our members that gets a large number of their sales from the aftermarket business, and it is absolutely critical in terms of piracy. We see piracy as stealing jobs out of the U.S., destroying these businesses. The sales of pirated products coming in are absolutely astronomical. I know that there was legislation passed several years ago to address, issues of piracy and copyright, but quite frankly, these issues have not really been overseen or administered, I should say. There's nothing that has really been done about that. So we need to put some teeth into this legislation that is already out there and enact some of the current piracy legislation that is in place and really go after these folks in a hard way. I mean, there's several cases, brake shoes made of sawdust. I know you've seen all that, and it's very disturbing.
We've seen the piracy issues firsthand, even on the tooling side. We've had an opportunity to build some tools for China, and going in that you're going to get one opportunity, and then you're not going to see it again because those tools are going to be copied. So there's an immediate concern and a very real concern. And we've had customers that have actually outsourced tooling, outsourced to China, either tooling or product development, part run production, and actually created competition for themselves because China copied those tools, copied those parts, and they see it on the shelves right next to their product from the very tools that they had built and parts they had ran in China. So very real, all the way down to the tooling side, piracy.
Mr. Jones?
As I mentioned earlier, the surface finishing industry does not manufacture anything. We just make things look better, work better, last longer. So we are dependent upon a strong manufacturing infrastructure in this country for the survival of our industry. What we are seeing in our customer base, some of our customers are sending product to China maybe to have it quoted, and they may not have taken advantage of the China price and kept it here in this country, and they may have used it to lever some of the other costs down domestically. However, several months later, the same quote that they sent to China, the same part they sent to China to have quoted, they're seeing in a catalog from China up to the portion with their logo on it. So that certainly is pirating. Other things on the quality side, we have one of our major customers that competes worldwide, and especially with China, on some product that's used in the construction industry. 2 years ago, we had a chance to go over to China to take a look and see what they were doing and how they were doing it. And we looked at some of the heat treating that they were doing on some of the product. We said, what do they know that we don't know? We came back, we ordered some of the product, or they ordered some of the product. They sent it out to independent testing labs, 10 different independent testing labs throughout the country, and 7 out of 10 of those products failed the torsion and structural tensile test that are required for that grade of product. Those products are used in safety and nuclear equipment.
Mr. Norge?
Thank you. In the metal casting industry, we use a lot of tools and dies to make our products. So Mr. Overton and I may be a little redundant on some of our comments here, but just over the past decade or so, the metal casting industry has just been besieged with tooling quotes, et cetera, coming from China. Product goes over there. It is absolutely pirated. We have lost every type of domestic oil and gas drilling equipment has been prominently displaced over there. Compressors, things of that area. What we do, as well as the automotive sector at Dennison Industries, we make a lot of castings for the defense market, and we do a lot of scanning equipment, things that would in our industry that would go for the equipment that would find a life-threatening disease. Things would scan luggage at an airport to keep things out of the airports from people who are trying to harm us. We produce armaments and vehicles that transport and protect our troops and our defense systems. What's the next thing to go and be pirated over there? And I hope that we don't fall into going after that for cost purposes alone.
Mr. Moore.
Thank you, Madam Chair. And I'd like to direct my first question to my fellow Kansan, Mr. Reed, and to Mr. Smith as well. And if anyone else should care to comment, please do. There's no question that recent events in the auto industry, including Chrysler's bankruptcy filing and GM's announcement there will be shutdowns at plants this summer, could have huge impacts on small manufacturers and parts suppliers that will lack the cash flow to maintain operations. These problems are exacerbated by the fact that the freeze in the capital markets has been crippling for many small manufacturers. Could you tell me what problems you are facing with regard to receiving loans or lines of credit from banks, what you think are the most effective way to ensure that viable small manufacturers and parts suppliers have access to the capital they need to maintain operations while the auto industry restructures and the economy recovers? Should we be looking at expansion of the automotive supplier support program, a direct loan program administered through the SBA, or a reconfiguration of 7A loan guarantee requirements to ensure that small manufacturers can participate even if they're dealing with cash flow problems? Any comments on your situation?
Yes, sir, Mr. Moore. I think I mentioned some of those in my opening statement, but personally, in my situation, in fact, in Kansas, just to give you an idea, I asked 3 local banks. There were 330 banks in Kansas that were offered the TARP. 4 of them took the TARP. And the reason my local bank and anybody in Manhattan did not do that was 9% cost of money that was put on that, and the bureaucracy and the regulations that were further put on the banking. They did not want to pursue it. Now, my personal situation was such that I, at the current point, don't need the working capital there. I do need in Arizona, but I don't need it in the Kansas at this point. But the problem we're facing is the banks, theoretically, the ones that haven't they're not necessarily changing the level of quality or qualification to get the loan, but they're not lowering it either. So they normally look at, say, what's your cash flow? As what somebody said, cash flow, cash flow, cash flow. If the receivables are down because we don't have the business base anymore and the cash flow is down, we need to have the working capital, which I mentioned earlier.
Sure.
The SBA does not do it under the current situation. That will not help us. But if we expanded it to a suggestion that I made earlier, something like that, that would be very helpful. As far as the other activities, I think we're looking at, I said, 90 days to 6 months. If we don't do something, an awful lot of these people are not going to make it. And again, nobody wants a handout, but at this point, we have to have some way to keep the operation going, to keep the payroll going, and keep those people employed, because when it does turn, and it will turn, you're going to lose all the qualified people, and that's more difficult to get started than before. So I think that addresses at least one of those, Mr. Moore.
Thank you, Mr. Reed. Mr. Smith, do you have any comments, sir?
Yes, in terms of the large tier ones, and that's a lot of our issue, is the health of the large tier ones. We need to make sure that they are healthy and they get through this crisis. The MEMA originally, when the programs were put in place in the $5 million carve-out, if you will, for the supplier early pay and receivables assurance program, estimated that $14 billion was needed, not $5. And also the timing of just getting these things done has been very cumbersome. For instance, a lot of the weight, if you will, is doing lien searches on all of your receivables. So by the time, with limited resources, lien searches are done, the OEs are acting as quickly as they possibly can, but quite frankly, their hands are tied somewhat by city and also the Treasury Department in terms of getting these things through. We need to have a quicker response. We need to have the tier ones healthy so that the tooling industry gets paid. Everyone is paid. And we also need to have a program in place to help us, again, when things turn back up, that we've got the cash to be able to fund these things. In terms of the smaller companies, absolutely, the SBA needs to be redone. $2 million is not enough. At a minimum, it should be $5 million. And it needs to be able to be done quickly. And some of the requirements and the T's and C's that go along with that need to be really smoothed out. I mean, we appreciate the fact that the fees were waived for the automotive crisis, but it's not the fees, it's the timing, the amount, and some of the other requirements.
Madam Chair, my time's about up. I yield back the balance of my time. Thank you. Thank you to witnesses.
Mr. Westmoreland.
Thank you, Madam Chairman, and thank all of you for being here. And I realize the condition the auto industry is in, but for you guys in the manufacturing business, I think we've already seen a lot of your people or a lot of business manufacturing shipped overseas, and manufacturing is a key foundation to this country. So, Mr. Jones, I wanted to start out, I'll ask a fellow Georgian a question. You said in your testimony that the problems for your industry are larger than the automotive crisis. And I'd like for everybody to answer this, but where do you see other segments of U.S. manufacturing headed? Because to me, manufacturing has been hit harder than anybody else with job loss and really company loss. So I'd like to hear your answer to that.
Thank you, Congressman. As I mentioned, Dixie Industrial Finishing has had to replace 100% of its sales within the last 10 years. And the reason for that is the exodus of manufacturing in our region to other parts of the world, whether it be to Mexico or whether it be with manufacturers importing their product that they previously manufactured domestically, importing from China or India or other low-cost producing countries that don't have the same regulatory requirements that we have. They don't have the structural costs that we have. They don't have the tort. They don't have the taxes. They don't have the health care. They don't have the regulatory. They don't have the energy costs that we have. So consequently, we're having to deal with them going elsewhere and us trying to find new business. Well, where's our new business coming from? Our new business is coming from those in our industry that have suffered far greater than we have by closing their doors. And that's where we have been able to pick up some business. We've also been able to do a lot of things to keep some business here and allow some of our customers to be able to compete on the world market through innovation and technology by productivity improvements. We have one product that we process that over the last 7 to 8 years to help one of our customers, we have increased productivity by over 300%. On other products, we've had as much as 200% and some 100%. So we're constantly investing. We're constantly looking at new technologies. We're constantly doing things to try to protect our customer base and protect the jobs here in the U.S. and try to keep them from going elsewhere. Other times, we can't do anything about it.
Now, let me ask you this. Is that due to bad trade agreements? Is it due to regulation, environmental, and as you mentioned, I guess labor laws? Has that led to part of it? Is it just bad trade deals, or what's causing that?
I think that it's probably a combination of many. On the regulatory side, on our wastewater treatment, the water that we use for our processes and our environmental controls, we spend right at 10% of our sales dollar on regulatory issues. A gallon of water costs us 0.008 cents per gallon to purchase it. When it goes out our door after we've treated it, we tack another 3.9 cents per gallon onto that gallon of water. That is a cost that's associated. We have other things that we're looking at that we're having to face with some of our trading partners is certainly low wages, no regulatory. They have unfair trade practices such as currency manipulation. There are other issues as far as government subsidies on items that they export to the U.S. So these are some of the items that are affecting manufacturing domestically.
Any of you other gentlemen on the panel would like to address that?
Yes, sir. I think it goes along with what we mentioned earlier about the problem with dealing overseas and even some of the American trading partners of ours where we have the inability to compete and the risk of upsetting the chairwoman again. We have to do something with the taxes. We are 25% behind the 8 ball starting. Most of that is tax or import duties or things like that. Add the federal situation, most of the states are hurting. So what is the state going to do? They're going to be doing the taxes and the counties and so on. And by the time you get done, there's just nothing left for anyone to do. And your margins are so small to be competitive, it really becomes very, very difficult. And then you add the health care issue, which I mentioned earlier to it, which we all want to do. I mean, that's one of those things that we feel strong about. It becomes a very, very difficult situation. So I do think that we have a short-term problem, which we've kind of addressed here about how do we get cash infusion, how do we keep people alive for the next 5, 6 months. But we really do have a long-term problem in America on manufacturing in that we are kind of forgetting about how we got where we got to. And if we don't look into it, a lot of these industries are going to end up being forced. I have one gentleman in my association who last year had 580 people. This year he has 210. He had 4 plants. He now has 1. And unfortunately, the one plant manufacturing is in China. And that's just the nature of the beast. So we need to really look seriously about that once we get out of the hole we're in right now.
Thank you.
Thank you.
Thank you, Madam Chairman.
Ms. Dolkemper.
Thank you, Madam Chair. I come from western Pennsylvania, area that's been a traditional manufacturing area, and many of our small manufacturers also produce Tier 2, Tier 3, Tier 4 manufacturing for the auto industry. I guess I have a couple questions, and I'm going to start back maybe more at the beginning. How much of where we are today do you think really was contributed by the fact that the auto industry's business model didn't maybe look to the future? And anyone, I'll open that up to anyone who would like to address that. Mr. Nod.
Thank you. I agree wholeheartedly. Having many of our members do business with Tier 1s and some direct to the Big 3, there has been just a blatant beating down of these Tier 2 and Tier 3 metal casters to you lower your cost, you do this, everything that comes in, you need to have a give back. We had just one company here that I'm aware of in the last month. They closed a plant and laid off 350 employees, moved a machining cell into the current facility because they'd opened space from already having a major layoff. And their automotive customer, one of the big three, said, oh, well, now that you've moved that indoors, how much of that can you give back to us? Utterly amazing. Mm-hmm. Utterly amazing. And it goes back, you think, all of us small business people that are going back and cutting costs, becoming leaner, meaner, being more innovative, more creative. My foundry, we put out just as much product now with 125 employees as we did with 186. Why? We were creative, we were versatile, and we did things to keep ourselves moving forward. How can a company, when things slow down, offer $2,000, $4,000, $6,000, $8,000, $10,000 rebates on vehicles to get off the lot? Where was that money going all the other times, going out the door in bonuses and all these other things that were poor business practice, and where was the saving for the rainy day that's here now?
Anyone else like to address that? Yes, Mr. Smith.
I'd have to disagree. I think that the U.S. auto manufacturers that are currently in this crisis, they definitely have vehicles that are relevant. The fact is that we have a very fickle consumer society, and that years ago people said, how come there weren't more hybrids? Well, quite frankly, they can't give hybrids away today. It changes so quickly, and the fact is that the quality is on par with anyone. The vehicles are good looking. They last. They're excellent. They're excellent products, and I think they are relevant. I think there's been cost and, quite frankly, a cost cycle that's finally come up with them. And in terms of some of these same issues that we talked about, the pension liabilities that, you have to remember General Motors, the size of General Motors where it was 30 years ago versus where it is today, the number of employees that it's still obligated to make sure that they do what's right by the workers. And you compare that against the new domestics who are just relatively, although they've been here 25 years or more, that's still relatively new when you compare to a company that's been around for 100 years. It's some of these cost cycles. I think that the thing that we need to see in the industry is we just need to get over this. We need to make sure that we put the right amount of money so that they can come out of this thing strong and healthy. I know that it was stated that $38 billion has been dedicated so far to the industry. Well, quite frankly, we talked about that same number that was going to be needed in the fall time, but the money came too slow and not enough on time, as quite frankly is the way that I see it. And that we have spent close to $1 trillion in order to save or create 3.5 million jobs. Well, for less than a tenth of that, we could save and create 3.5 million jobs. And I think that when you take a look at my state of Michigan, the fact that Michigan has the struggle with its unemployment numbers as much as it has not been just the loss of the automotive jobs. What we have lost is the job creation factor of those jobs. And for every Tier 1 automotive job in the Midwest, it creates 5 to 8 additional jobs. And so when you lose a Tier 1 automotive job, 5 or 8 jobs follow, and that's why Michigan leads.
I think what Mr. Norch is saying is that the Tier 2, Tier 3, they've gone lean, they've gone, and that's what I've seen in my district, is those companies are producing amazingly efficient, with amazing efficiency. And I'm not sure that we saw that in the big three.
Well,
and I come from a family where my brother-in-law was an executive at Chrysler for many years, and I'm saying that, I guess, from my personal experience. But Mr. Overton, you had just a comment?
I agree with most of Mr. Smith's comments. I think there's a distaste for the Detroit 3, or whatever you want to call it, in the United States right now, that most people looked at it and said, let them go bankrupt. But what they didn't consider was the jobs that we create, the 5 to 8 jobs for every one job that's in Detroit 3.
I think you've all done your job, and that's what I'm saying. I mean, I'm saying that all of you have been.
A lot of this they brought upon themselves, no doubt.
My
time is expired. Mr. Griffith.
Thank you, Madam Chair. I'm from Alabama 5. We we in Alabama have been producing a great number of automobiles. And think of ourselves as possibly the Detroit South. What I think, there are a couple of things that are come to mind. Number one, do you think we're going to get back from, we sold 16 million units of automobiles at our heyday, maybe 17 million. We're probably down at 7 or 8 million right now. Doesn't look like we'll ever get back to that number. And I keep hearing that we are expecting a recovery in 180 days. Now, if you guys know something I don't know, I'd love to hear it. I think it'll be much longer than that. So I think we've got a lot of more of choppy water to go through. The other thing that I hear is that throughout your testimony you're talking about companies and American companies, and I think that's one of the myths that America's suffering through right now. We're recognizing that we're globalizing our economy, and we still think of these companies that grew up in America as having some or should have some loyalty to Americans, and we're finding they have none. They are our worst enemy, and they're within us, okay, as far as our manufacturing sector is concerned. They contribute to the Chinese copying our products and selling them back to us. Okay, so they're responsible for their 90-day Wall Street report and actually have no loyalty to America at all. So it's probably going to be within our jobs to incentivize them to treat America as their home base, just as China incentivizes its companies, India incentivizes its, but no one is incentivizing companies in America to stay home and take care of our manufacturing base, and we're in great, great danger of losing the ability to compete in our defense industry, our automobile industry, our healthcare industry, making, whether it's Medtronics, whether it's making hips, whether it's making valves for the heart. We are in great danger of that. And I think we need to look at our American industries that we think should be helping us and recognize that they are not. And they are not going to pay attention to the small manufacturer unless we force them to with incentives. And I share your concern. I am very concerned, but I think America still has this idea that there are American companies out there that are loyal to American workers. That's not the case. They're loyal to a 90-day report, and they'll do anything to make that report good to sustain their stock. The other thing that we're faced with here is that the titans of industry who said they were committed to the free market, the first cold wind that blew, we found out they didn't believe it at all. They were here in Washington with their hand out, wanting to partner with the federal government. So we recognize how flexible we are in our principles, and I think we need to be just that flexible as small manufacturers, because they will throw us under the bus in a heartbeat for their 90-day report. So I appreciate each and every one of you being here, and we've got a serious problem, but I don't think it's going to be over in 180 days. Thank you, Madam Chair.
Thank you, Mr. Griffith. And Ms. Clark.
Thank you very much, Madam Chair. I want to just highlight an article I read yesterday in the Political entitled "Detroit Should Hear from Obama" by Jamal Simmons. In this article, Mr. Simmons mentions the plight of African-American dealers and the challenges they face within this niche market. He states African-American auto dealers face a particular challenge because GM's plan to cut low-performing auto dealerships will hurt their small ranks significantly if there is not a plan to maintain dealer diversity. According to one dealer and several news reports, many of these businesses were set up in lower-income, higher-risk areas, which make them much more vulnerable in purely quantitative, qualitative evaluation. Minority auto suppliers are in similar jeopardy, and I ask that we submit this article for the record. I strongly believe that minority-owned small businesses in the automotive industry are a very important part of this equation and important to subsequent solution to this crisis. As spending decreases, I, like many others, fear that many of the supplier diversity programming implemented by the bigger auto companies, like GM, are in jeopardy of being cut or severely downsized. Moreover, minority suppliers in particular tend to be highly leveraged business owners who are located in urban environments and often employ minority employees. Their investment permeate throughout urban communities, helping to sustain local economies. In the event that these niche small businesses have to close or downsize, their investments in urban communities will disappear, creating a void in local support and employment. As a representative of an immensely diverse urban district, I'm concerned that minority manufacturers, suppliers, and even dealers will indeed be left out of this discussion and subsequently left out of this part of the solution. In conclusion, it's my hope that in this discussion, and many to follow, we as a collective can come up with solutions that will benefit all the small businesses that are the engines of employment in communities across this nation and who are affected or in danger of being affected by this automobile crisis. So my question is to Mr. Smith and to Mr. Reed. Given my remarks and the fact that you represent over 700 manufacturing companies, Mr. Smith, in your view, has the current market conditions caused a disparate impact on minority suppliers?
You know, the issue with all suppliers, minority, especially, has been since, and we talk about in manufacturing the recession since 2000. And since 2000, over 5 million jobs in manufacturing have been lost, and it's currently we're at a record pace this year. And Dave Bing, who's the new mayor of Detroit, has a business that's very similar to mine, and we have done business over the years together and helped each other out when we're in times of trouble. And I know that he's had his struggles in his business, and we certainly have had ours, and I think we're all in this boat together. I guess what I'm saying is that unless we do something to make sure that the U.S. automotive manufacturing base is strong and can continue on both at GM, Ford, and Chrysler, then minority dealers and minority programs for suppliers won't even matter. We need to make sure that these guys are healthy so they can continue on with the programs that they pioneered decades ago.
I hear you. I think certainly I believe in the rising tide lifts all ships. I just wanted to point out that there oftentimes is a disparate impact because these companies tend to be smaller, located in urban environments where their consumer base, is something that they rely on as well.
Again, with the dealership network, I really can't comment.
Mm-hmm.
But in terms of the supplier industry, I think that we've been pretty much in the same boat together.
Very well. Thank you very much, Madam Chair. Oh, I'm sorry. Mr. Jones?
Thank you. One of our customers is a minority-owned company in Atlanta, Metro Atlanta. 2 years ago, they had 260 employees. They provide component parts for both Ford and GM. Headrest components, seat components, door latches, hood latches, trunk latches. They are now down to 60 employees. They are in survival mode. The 260 employees that they had were actually employees that had the ability and the capability to purchase the same products that the automobile manufacturers are building to sell. What we're seeing with the manufacturing decline in this country, and when the automobile manufacturers and other major manufacturers are exporting jobs out of the country, then what in fact they are doing is they are destroying the market that they had helped create at one time.
Time is expired. Mr. Reed.
Yes, you asked me a question earlier. I just wanted to make a point from our industry, the machine tooling and so on. I don't think there's any difference from one company to the next. I've seen nothing whatsoever. We're all hurting, and quite frankly, that hasn't even entered into the discussion at all. One of my companies is filled. I have a number of minority. First time I even thought about it is when you mentioned it. It makes no difference at this point. So I do think on the dealer side, I can't comment on that, but certainly on the manufacturing sector of our folks, we're all in this together. Thank you.
Okay. There is set of votes on the House floor, but before we adjourn, I would like to ask one question, final question to any of the witnesses who might want to answer. How far down the supply chain will the auto supplier support program have to be expanded for it to provide support for a company such as yours? Anyone? How far? Tier 2?
Yeah, it has to go
All the way down.
all the way down, all the way down to the tier 2s, 3s, whatever.
If I can't get the product or manufacturer that he's going to assembly and send machine tool, it makes no difference. So you need to go the whole range.
Okay.
And the delta is obviously larger at the top than going down, probably.
Okay.
And that's why
needs
this
to go down.
insurance, this 1 or 2 or 3%, that solved the whole problem. I mean, everybody could apply for that and guarantee receivables.
Okay.
It's a quick answer and a simple.
Mr. Graves, do you have any other question? Okay, so let me just say in conclusion that the committee intends to work with the administration to make sure that the auto supplier support program helps the foundation of the industry and look at financing initiatives that could be able to support and answers to the needs of the industry that you represent. I ask unanimous consent that members will have 5 days to submit a statement and supporting materials for the record. Without objection, so ordered. This hearing is now adjourned.
Thank you.
Thank you. You go okay? Did you go okay?
Thank you, Mr. Chairman.